Innovations, entrepreneurs, and capital are reshaping Africa's fast-growing electronic payments landscape with solutions for consumers and businesses alike. But while cash is still king in many parts of the continent, Africa has kept pace with, and in fact, some instances even led this innovation. And an influx of new investments and regulatory shifts continue to shape the e-payments landscape on the continent. So with banks and non-bank players alike innovating to reduce friction in domestic and cross-border payments and deliver much-needed solutions to consumers and businesses, Africa's domestic e-payments market is expected to see revenues grow by approximately 20% per year, reaching around $40 billion by 2025. But one aspect of the payments landscape may not be the solution it's being touted as, and that's the virtual card space. Foreign payments are difficult across most of Africa, which makes a financial case for fintech companies to provide virtual cards that enable limitless foreign payments. But is this really the answer? Joining me now is Omani Kolade. He's the founder and CEO of Searbit, one of the fintech companies operating in the space. Omani, welcome to Business Edge. Thank you so much for joining me.
Thank you for having me.
So, Omani, I would like us to start with looking at the key payment challenges that Africans encounter across the continent, which has led to the rise of fintechs attempting to plug this gap, bring the solutions, and businesses like yours, which are trying to find a way around these challenges. So what are primarily the challenges that we have when it comes to payments across the continent?
Looking at it, let's look at it from the landscape, right? Looking at the challenges we have in Africa today, where you have over 54 countries in Africa, and each of these 54 countries has different regulatory, and each regulatory has its own model or how they are actually aligning strategy when it comes to payment in the market. So you're looking at almost 54 directions when it comes to policy. You're looking for 54 when it comes to options of how the few payments should be adopted or implemented in their local market. Now, this already, it's a point of fragmentations, right? And there's tendency where you have different preferred solutions in different local markets in Africa. If you look at it comparing to Europe, for example, where you have a popular payment methods like cards, which is common among the European countries or South Americans, that is not for African here. You have different payment solutions for different local markets. Like Nigerians, where we have varieties of payments where we are from what they call pay with card, pay with bank transfer, pay with USSD, pay with bank account. Moving that to East Africa, you see that you see a level of penetration when it comes to mobile payments, like mobile money, which you see when it comes to M-Pesa and the rest. Looking at Ghana too, where you see also mobile money. It tells you that there's something that does not align when it comes to strategy and policy with the size of the continent itself.
So in this whole space, this is where we see the virtual cards actually playing out. Why does it seem that virtual cards have been held up as this sort of one-size-fits-all magic bullet sort of solution to the situation?
Okay, let's look at it from the point of what kind of businesses is applicable to use some of the solutions, because virtual card is not really different from the card, right? The difference is just it's still the same 16 digits bank account, but the difference is that it's not physical, right? And these solutions are being provided differently from different use cases. You have solutions which are being provided from third parties outside the zone of Africa. And when these solutions are being set up or provided based on the kind of partners you have, there are elements of conditions that comes with them. And the element means that what is the commercial model you understand these platforms actually provide today. And those commercial model will determine how the service can be offered today. So virtual card actually comes to address some key challenges when it comes to how can people pay for some of the commerce that we have today, right? When it comes to e-commerce. And you can see the rise of e-commerce across the globe, right? And some of these big e-commerce are scaling into some of these spaces when it comes to African countries, right? Where they have customers all across. And the most important thing is that how do they really penetrate and make it easy for these guys to pay? And that is where we see the introduction of some of the cases like virtual card, because virtual cards allow you to really pre-fund your cards and still be able to do those online commerce. And if you look at it also, there's this bridge between understanding the landscape of Africa, where customers are not differentiated, and also understanding the landscape of what are the legacy systems you understand some of these big commerce are used to from where they are coming from before they penetrate into African market. They are practically most used to when it comes to card payment. And I feel that that is not really should be the only case or the only options that we are looking at. But it's the easy way where you can actually be able to address the challenges of what they call cross-border payment too, when it has to be where how businesses want to repatriate their funds, you understand, when they actually collect this fund from customer. So there are elements of it where you look at it to say people are using it to maybe meet up their immediate need, but does not mean that is the only options that we have in Africa or the only options to really meet up or addresses some of the opportunities, you understand, to scale their businesses.
Okay, so I want us to use Nigeria now as an example. Largest economy on the continent, most populous black nation, fast-growing youth population. Fintech finds a lot of money here, or a lot of money finds fintech here on this part of the continent. But what we've also seen is that the Central Bank of Nigeria has set monthly caps on international transfers due to the country's foreign exchange crisis. At one point, it was as low as $20. And I'm really asking myself, what would $20 do for anybody? The majority are either shopping for their businesses, sending their family and friends to school, sort of things like that, that are running into the hundreds and the thousands of dollars. But the truth is, it's also a gap that needs to be filled. So when we look at the implication for this sort of situation that leaves Nigerians and then in a larger scope, Africans holding a very limited bag, what are the implications for us when it comes to a situation where you have regulators like the central bank setting these caps, not because of any other thing, but also because they're facing a foreign exchange crisis of their own that they haven't been able to manage?
Yes, I think there's so much impact if you look at it to the economic itself, right? And also, there's also the varieties of impact when it comes to businesses trying to scale into a country like Nigeria, right? Because there are barriers, and those barriers has to be addressed, right? I feel we have so much pressure when it comes to our efforts today as a country, right? And I feel that the only way we can look at, or the only way we can actually position some of these approach is to see how we can realign and reposition the varieties of other options that we have locally. And like I mentioned earlier, I was telling you about the other local payment solutions you have. Because some of these things that you really want to pay for, in some cases, like you said, right, some of them actually, they are readily available to you as a service. So why can't they be readily available to you as a payment method too locally? You understand? So that customers can actually have access to this, right? When it comes to you being able to shop, you understand, abroad, I think the options that was made available was to make sure that you can actually have what they call your USD card, where you can source and then maybe as much as possible see how you can fund those cards and continue your shopping, right? But the challenge is how do you source for these options to achieve this goal? So for us, I don't think we have to look at it in a balanced way, right? To see that there's no one way to this direction, but we have to look at it from the elements of how do we make sure that we're not losing out when it comes to market penetrations into Africa, but how do we also relate some of the market penetrations to understand these challenges and then look at the options available in local market? Then how do we make sure that, okay, customers too can still have the opportunity to keep having that flexibility to spend? And that has to come at the point of regulatory and also looking at more options, beyond just virtual card.
So let's talk a little bit more about regulation now, because it often feels that many businesses, whether they're informal or small and medium enterprises, are one regulation or policy away from failure or success. You could wake up and the whole landscape of the business you do has changed because of regulatory and policy issues. So when we look at that in terms of the payments infrastructure network and even the adoption of virtual cards, what does this regulatory landscape look like for businesses in particular across the continent?
So I think the same applies to how the card regulatory is being applicable. Like I said, the difference between virtual card and your normal cards, which is physical, is just having that physical element, right? The virtual card comes to like 16 digits, which represents your bank account, right? And if you look at it, I think earlier this year, the CBN actually introduced a policy where the CBN was trying to introduce the local payment card options in the market. And that will also tell you one thing that needs to be addressed when it comes to how payment is being structured. What does that mean? It means that there's an element where I'm actually paying for service locally, but the cost of actually that transaction is in FX also. So there's a cost element that actually transits to FX, even though I'm paying for a service locally. So you see that the regulator is trying to solve a problem there where you cannot be transacting local, and part of your processing cost of that transaction is actually in FX itself. So there are key challenges that we feel that if they can be addressed, like looking at the way where some of these this entire value chain of processing those transactions can be fully local end-to-end, right? Could actually give in more cheaper way of pricing and cheaper way on some of these transaction costs that we're experiencing today. So regulatory-wise, I've not seen any backfall on what is happening with virtual card. I just feel that the commercial element and how these products have been positioned in the market is where the challenges are. And we'll look at how we can collaboratively solve those problems.
All right. So as we're saying here, it seems that virtual cards are not necessarily the golden bullets that they've been made to be, but they are convenient. But let's talk about how many people they are truly convenient for, because when you look at it, there are some aspects that put virtual cards into an interesting space. How widely accepted are virtual cards across the continent, particularly by merchants and businesses? And beyond that, even how accessible are virtual cards for the majority of Africans?
Okay, I think this totally depends on how the market penetration looks like based on the type of fintechs offering the services. There are so many value when it comes to virtual accounts, right? You can look at using virtual card for corporates where they want to actually use virtual card for spending or for travel for some of their staffs, right? You can use virtual card for setting up some recurrent utility services. You can even use it to control your spending online to avoid when it comes to fraud, right? Where people can easily hijack. You can create a virtual card just for purpose of spending, and then you can trash it all. So there's so much value with virtual card. And I think there's a report on Jupiter where they are looking at between 2022 to 2038, right? Where they're looking at there's going to be like over 280% increase when it comes to adoption of virtual card. Now, that tells you that there's a need for this product, not that there's no need. And those needs are actually vary based on the kind of verticals or businesses you're looking at. Hospitality, for example, now, right? You see that there's a huge need when it comes to virtual cards. So being able to assess it is totally dependent also on what are the approach or strategy some of these companies are looking at and which areas of the business are they trying to use it to solve. But availability, it's totally dependent on the value proposition and the areas or the gaps that those solutions can actually resolve or their position to solve.
All right, so let's take this a bit beyond virtual cards now. Not necessarily a golden bullet, but parts of the solution and the infrastructure we're going to be seeing for the electronic payments system on the continent. So what other options exist beyond virtual cards that can also help to address Africa's payment challenges? What else are we looking at, whether that's present now or that we need to be looking at developing as we see this growth across the continent?
I think I'll point out that there's so much, there's a long journey for us and there's a huge opportunity, actually, as a continent. But we have so much varieties of payment methods today in Africa. And starting from, let's look at the case of Nigeria, where you have 4 types of payment today in Nigeria, popular payment methods being used beyond just cards. You have what they call pay with bank transfer, right, which is becoming a sense of popular payment methods using even within the what they call the FMCG space, the fast-moving consumer goods. Yes. Looking at those space, right? You look at, and those are the areas that you find that there's so much huge when it comes to cash activity, right? And 35% of the financial excluded, right, actually find themselves in this space. And these payment methods have been picking up, which you are seeing some traction that is even actually trying to catch up with the pay with card option. So those are options that we can see in the markets. We can see an element of USSD that actually addresses some small ticket size, but also make it easier where you can pay. You don't need an internet to be able to offer these services. And looking at East Africa and some part of element of West Africa where you find mobile money also, and some cases where QR payments has been also introduced, right? So realize that for each market, right, there are choices customers are actually choosing that they want to use. And some of those choices are rising, and those choices are the pay back transfer, mobile money in cases that you find yourself in different markets.
So interesting that you bring up cash, because I did start with the introduction talking about the place of cash and how cash is still king, but it seems to be being challenged now. So Moni, I'd like to hear your thoughts on that in terms of we're never going to see cash completely being eradicated, because even countries where all the things are in place, cash is still very heavily used. But how do you see cash going into the future, particularly as we see this growth of the electronic payment systems? How much longer do you think cash will be king before it just becomes one of possibly like the princes, quote unquote, in this system we're going into?
Okay, I think just like say, cash is the common enemy, right? And is the common enemy to digital itself, right? And then when we're looking at digital, we look at the kind of solutions we have been introduced are mostly digital solution, and we have to look at it from the point of foundation, right? How do we really get this in a long journey? You have to look at the cost of penetrations of internet, you understand, which is very key in a lot of key markets when it comes to Africa, right? If you are not having this kind of easy or let's say devices, you understand, that enable some of these solutions, right? We are still not going to be at that stage where we can really fight cash, right? And looking at those devices and looking at the penetration of internet also, what are we looking at when it comes to how can these devices be accessible? Because some of these devices are not being manufactured in Africa, where mostly they are being imported. So if you look at the cost element of getting these devices into even the market itself, right, and trying to get people to adopt to it, there's already a barrier. And those barriers are barriers that needs to be solved because as much as you want to really deal with cash, right, you must also deal with the foundation that requires you to create that tunnel. You understand the change that requires in the market, and those change has to be really dealt with at the infrastructure level, right? Seeing how we can drop the cost of internet penetrations in most market, seeing how we can actually drop the cost of those devices, right? That makes easy for digital to streamline into the market itself, right? And then people can easily pick up some of these options or solutions, right, to really fight cash, right? I believe that in as much as those key areas can be addressed, I feel that there's future, right, to really fight cash. But if we're not really dealing with those key things, I feel cash will still have so much relevance, yes, and now and in future.
Okay, so let me flip that a little bit to also get to this point. In terms of cash having a future, but you said it's the common enemy as well. What are the opportunities that you see existing for fintech startups or fintech businesses to disrupt traditional payment systems across the continent?
I think there's always an opportunity. You see, every fintech, if you look at the journey of a fintech, right, you feel like every fintech is an element of a bank itself, right? So every fintech is actually originating, solving a problem from a system where the bank is actually positioned to actually solve. The bank itself cannot really solve all these challenges in the market, and that's where fintech becomes relevant. And fintech takes some elements of where maybe some financial institutions have not really been able to provide the quality of services, and then they take it further to innovate and expand and scale on it, right? And as long as fintech wants to really address his scale and find more opportunity, I think we need to also look at what are the challenges financial institutions have not been able to fulfill in the market today, and how much are those opportunities and how big are those problems to the sizable customer, and how well do they have the right solutions to solve those problems. I think those are key things that actually could actually make a big shift for us, right? Looking at some big fintechs today, you see that there have been a leverage of even sitting on the financial institutions to be the kind of size they be today, right? Because the common center for everybody trying to save, get a loan, lend your money, and all these things all turns back to financial institutions. And those are where I think the gaps and the challenges are actually scaled from. And we can actually be able to open everybody's understanding to that position. And just to say this also, we also need to look at the value chain between the customers, right, and also what the market, yes, and how those customer interacts with commerce as a whole. Now, customers has to interact and they have to make it seamless. And as long as they have their money stored somewhere, how do you create those transitions between where their monies are to the marketplace? Actually, also, it's actually a big area everybody needs to zoom into.
All right, so Mani, before I let you go, this industry is expected to be worth about $40 billion by 2025 here on the continent. But when you compare that to Latin America, which is estimated to get about $200 billion, we will still have the fastest growth, but we're still not where we need to be. So when we look at the factors, what are the factors that you think will shape the outlook of the e-payments markets on the continent? Because virtual cards are just parts of this sort of gears and wheels that we have going on. And they say Africa's payments are entering a new era. In terms of that new era, what are the factors that you think will shape it?
I think there's so much policy I think we need to start looking at when it comes to payment, and we need to start drafting policy from actually the immediate needs in the market, not just looking at a policy from another continent or looking at it from the higher, from the helicopter view, right? I think we need to start looking at it from really what's happening and what's peculiar per time for different verticals or industries as a whole, right? And like I earlier said also, we need to quickly, as much as possible, start addressing some key infrastructure elements to really position us, because like you said, the potential is there, and for you to address the potential, there are also factors that are actually impending or delaying some of those opportunities. And there are key areas, and interoperability is also one key area we need to look at, because I feel one of the things we've neglected is interoperability. As much as we are building solutions and we are feeling like these solutions are the right solution for some of the customers, but I think there has to be a sense of policy and sense of direction from the one way. There has to be an interoperability between any kind of payments at any time when they are launching to any kind of market, because it gives an open wave, you understand, to the markets, to customers, and then to the economic itself.
All right, Omani Kolade, founder and CEO of Searbit, thank you so much for joining me as we looked at redefining payments in Africa beyond virtual cards. I know these are conversations that will continue for several months as we see this growth and developments in this sector. Thank you so much.
Thank you.